Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor, helping you realize your dream of owning a home or investing in one. Today's topic will be, what can $10,000 buy me? Well, believe it or not, there are some markets where that amount of money can help you buy a home, or at least make a down payment. One market that comes in my mind in particular would be in Missouri. There are certain areas that have been marked as opportunity zones where they are going through gentrification. Actually, they were going through it before it was even labeled an opportunity zone. And if I'm not mistaken, I've also heard of Gary, Indiana, another area that has been going through some levels of gentrification, and now they are receiving a lot of new improvements to that particular city. Now, what you may want to do if you are in a market where $10,000 really can't get you anywhere, even if it's just a down payment, you can team up with companies that do equity sharing like Unison, who will give you money to buy the home, give you money as far as the down payment, not the full amount. Buy the home of your dreams that you want so that it can be 20%. This way you avoid the PMI. When you sell it, though, there's a small percentage of the difference between what the house was worth when you bought it and what the average value of homes are in your area when you sell it. That's what you give back to them. So that's what you can do as far as buying a physical home with that amount of money. The next thing that you can do is tax liens and tax deeds. You will have a greater variety. There'll still be some tax deeds and tax liens that will be more expensive than $10,000, but you'll, at least with that amount, you would have a good majority, particularly that you can actually bid on. You will not have that here so much so in New York or New Jersey. You'll be limited in those particular states. But in other states, you'll definitely be able to make a bid. Let me just remind you, New York City does not have tax liens, but upstate New York, Long Island, they do. So, and then some of them have deeds. So you really have to look to see which one you want, first of all, and then look to see what areas actually have them. And as many of you know, tax liens and tax deeds, that's when the owners fail to pay their taxes. And if they do, you put in your bid, you are able to take the house away from them if you so choose to. The next area would be notes. And you can buy either performing notes or non-performing notes. You can buy, and performing notes are those that the person is actually paid up on their mortgage, their current. Non-performing notes are people who have missed a couple of payments. You can have a first position, a second position, third, fourth, etc. First position is for people who only have one mortgage. Second position are for people who have two mortgages and you're on the second mortgage, not the first. So that's so on, and that's how that goes. If the people do not pay their mortgage, if they stop for any reason, you can also foreclose and take that property. So that's another way to get property cheap. If it's non-performing and you try to do a workout with them, even though I know some people don't even try much to do that, they give them a foreclosure kit, which legally that's what you're supposed to do first, so that they can see what their options are. If they don't comply, then yes, you can foreclose on that property, and that is a cheaper way in which you can buy a home. You can also look on the foreclosure list. There are certain banks right now that actually list all of their foreclosures on their page, and you can buy a bank foreclosure. You may not necessarily find a property for $10,000 like you can with a tax lien or a note. However, $10,000 normally is enough to make a down payment on a foreclosed property. You can also go to HUD. HUD has a list of properties, and some of the properties on that list are for $10,000 and some are for more. But the ones that are for more, again, you can normally get a loan where $10,000 will be enough to make a down payment. Next, you can go and get a note fund. A note fund like AHP is where a company actually buys a whole tape of mortgage notes, and they pool your money together with other investors. AHP, this company, what they do is they try to get the notes to reperform. So in other words, they buy non-performing notes and they try to make it so that the people actually stay in their houses and pay a monthly, get back up on their feet, where there's a monthly fee not a monthly fee, but they're actually paying their mortgage. Now, just to let you know, when you put your money in with them, it's normally 3 years that you have to keep it. Their minimum is $500, by the way, so $10,000 is definitely enough. The interest that you make, especially if you leave it there for 3 years, will be 12%. If you take it out before that time, like let's say you take it out after that first year, you're only going to get 10% on your money. So there is a 2% penalty if you withdraw it before the 3-year mark, but you can actually leave it there longer than 3 years. And of course, the more money you put in, of course, the more money you're going to get back out. The next way in which you can invest your $10,000 is there are a number of crowdfunding sites where the minimum is $10,000 to actually invest. And I've even seen some where it's $1,000 and $5,000. Normally, again, they require that you keep the money in there for 3 years. If you pull it out, there will be a penalty. Always, of course, do your own due diligence to make sure the crowdfunding site is legitimate and the people who are putting up whatever property that they have, that they are legitimate as well. Because in my opinion, the crowdfunding sites don't do enough due diligence to make sure that the people are honest. What many of them do is they just check to make sure that the property that they're putting up actually exists and that the people have the paperwork to say that they own the property or are about to close on the property. So that is what I suggest if you're going to go that way. And if you want to know why, please pick up my book, The Perils of Real Estate Scam Alert, so that you'll understand where I'm coming from. And then lastly, the last thing you can do is buy a REIT, a real estate investment trust. And that's also where a company invests in real estate using your money, pooling it together with other investments. It's a form of passive income for those who want to invest in real estate without doing any maintenance at all. You have both private REITs and public REITs. The public ones you only pretty much get a share of the fund that invests in the property. You can buy more than one share of a REIT on any platform. And those they start normally at $3,000, but a lot of platforms that sell fractional shares will allow you to buy one for $5. So that's how that works. Now, the private REITs are the ones that you find when you go to real estate meetup groups or real estate investment clubs, like the real estate investors associations. So you would do that by networking. Normally, not always, but there might be someone there who has a deal on the table and they don't have enough money and they're looking for other people that will give them money to go ahead and invest in whatever property or properties that they have that they're actually looking at. The public REITs, you normally have to keep your money in there for 1 year so that you can avoid capital gains tax. The private REITs, you normally have to leave your money with them for 3 to 5 years. So it's up to you as far as which way you want to go when it comes to investing in REITs. It also is up to you and the market that you're in, how you wish to go about investing $10,000. So, well, folks, that's all I have for you tonight. Hopefully the information will inspire you to reboot your mind, reset your focus, and make smart financial moves. Feel free to pass it along. Remember, each one, reach one, teach one. Bye for now. Until next time.